Ladies and gentlemen, Jordan Dove here. It is Monday, June 27th, 2022. We have something new I'm going to start doing on Monday. If you haven't already, go ahead and subscribe to the Substack. It's a newsletter, it's free. Send it out every Monday, and along the course of the week, we also will send out other information that we find useful for you, data that I use myself in my business. Chuck, you guys know Chuck, he's looking at a lot of the same stuff. Go watch his videos, he's great. He does a daily show. He's unbelievable. He's one of Greg Manarino's guys, good friend of ours. Greg and Chuck, man, you guys are great. Thank you so much for your support. Go watch their videos if you haven't already. So first, we're going to talk about our national market update, the national real estate market update. And last week, Fed Chair Jerome Powell announced that first-time home buyers need a reset in the residential housing market, which I interpreted as housing needs to come down. And we're starting to see a lot of markers. I have never seen a market. I've been in the business 8 years. I know there's a lot of people who's been in the business a lot longer than I have, but I also speak to people who have been in the industry since the 70s, and they have never seen a market shift so fast from a seller's market to a buyer's market. We are seeing a ton of new inventory coming on the market. I believe sellers have that fear of missing out, or FOMO, and that peak happened a month or 2 months ago. Now they're freaking out, want to cash out. Now there's more options for people to buy, but interest rates are higher. So if you have cash, now's the time to start looking for some opportunities. We're seeing a ton of price reductions. On the screen here, I'm going to put up a Fed chart. This chart shows a monthly supply of new houses in the United States going back decades. And as you can see, right now there was a huge spike of a 9-month supply of new homes available on the market. That is a lot. 6 months is an even market, buyers and sellers, 6 months of inventory. Quite frankly, I believe 4 months is an even market of inventory, but we're at 9 months in new homes available on the market. Huge supply, which is a good thing if you're considering purchasing new homes. And speaking of new homes, nationally, new home sales broke a 4-month losing streak in May. They rocketed up 10.7% to a 696,000 annual rate of homes sold. And sales are still 5.9% below a year ago, thanks to the low inventory, but high demand has builders ramping up construction activity. We still have a large demand of buyers in the market. And the above chart that I showed you guys shows the new houses of supply in the United States. Big spike there. The past 2 years, builders were very strict with what they were allowing buyers to do. There was no negotiations. They were not paying agents any compensation. It was very small flat fees because, quite frankly, with low interest rates and cheap money and buyer demand being astronomical, they felt that they didn't need agents. Well, guess what? The times and the tides have turned. The time has changed. Builders need agents bad. They're offering crazy incentives, bonuses, high commission fees that they are paying. And when you're purchasing new construction, please use an agent, because those contracts are on the builder's contracts and they do not favor the buyer. But right now, builders are offering incentives to buyers to close on the property. They're giving price reductions, they're giving free upgrades. This might be the best time to purchase if you can get a great deal from a home builder. So we do see things coming back down. So if you're in the market for a new build, consult with your agent or call me. Ask for as many incentives as you can from these builders. Now, on existing home sales, those remain on a 4-month losing streak. They were down 3.4% in May. This was due to higher prices and mortgage rates and lower inventories, but demand is still strong because 88% of homes are still selling within 30 days, within 1 month. So homes are still selling quickly, but we are shifting back to a much more normal market. Sellers are reducing prices like crazy. So we're going to go into our Las Vegas, Southern Nevada market update. And following the prolonged hot streak that Las Vegas had, the housing market is starting to pump those brakes. Sales are down, available inventory is up, and more sellers are slashing their prices amid a sharp jump in mortgage rates that have pushed borrowers' costs up higher for buyers. And I ran numbers today on our local market. We've had over 1,000 price reductions in the last 7 days. That's the highest number I have seen in several years. We finally have over 5,000 single family homes available on the market. Have not seen that number in a couple of years, but sales are down, inventory is up. But not every aspect of the housing market is dropping. Buyers keep paying record high prices in Southern Nevada, and we're a region that's viewed as a more affordable outpost, a place to live, but we recently ranked as one of the worst spots in the country for first-time home buyers. And that's due to investors in Wall Street purchasing up as many single families under 500,000 as they can, turning them into rentals. And now those previous homeowners or would-be homeowners are now renting at premium prices. But the housing market's not only moving in multiple directions at once, people are also grappling with high inflations and fear of a recession. And moreover, the more pressing natural resources issues in our ever-growing drought-stricken desert metropolis keeps making headlines for all the wrong reasons. Some of you know Lake Mead is at pretty low levels, the lowest I've ever seen. If you've ever driven over the Hoover Dam, you can see the water in the lines is really low. But when I was a kid back in the early 90s, you would drive across the Hoover Dam to get from Arizona to Vegas, and the water was all the way at the top of those two clocks there. The water used to be there, no longer is. I think they will come up with a solution. I know a lot of people have talked about solutions. They will come up with a solution. It's inevitable. There is a lot of money invested in Las Vegas, multi-mega corporations invested in Las Vegas, and I don't think they're going to let their multi-billion-dollar investments go to waste due to a water drought, okay? But buyers in our market have indeed pulled back lately as higher mortgage rates wipe out the cheap money that has fueled this crazy surge of this unexpected housing boom after the pandemic hit. And on the resale side, just over 2,900 single-family houses traded hands in Southern Nevada. That was back in May of this year. That's down almost 9% from the same month last year, as reported by the trade association that I'm a part of, the Las Vegas Realtors. The median sales price of such homes was a record high $482,000 in May. That's up 25.2% from a year ago, or about $97,000. The past 15 weeks in our market, we have seen consistent growth of properties coming onto that resale market. Okay, as of June 27th today, there are 1,505 more active residential properties on the market compared to 2 weeks ago. And 2 weeks ago compared to 2 weeks before that, we had over 1,000 more active residential resale properties available as well. So we can see where the trend is going. Now, it still has low inventory, but we have reached a 2-month supply in our market. We were at 2 weeks, 3 weeks, 2.5 weeks for such a long time, and now we are seeing the inventory increase. Let's talk a little bit about last week. It was a short week in the markets, 4-day trading week. There was a big rebound with just 4 days of trading, but that was all the time that the investors needed to power the 3 major stock indexes to big weekly gains, snapping a 3-week losing streak. As usual, there were negatives led by the University of Michigan Consumer Sentiment Index. That sank from 85.5 a year ago to 50. It's the lowest reading it's ever had, and continuing jobless claims inching up for the week. But new home sales posted that strong upside surprise. That is the theme of today's video, is that new home sales are surging, and Wall Street felt that the recent signs of slowing economic growth would lead to less aggressive Fed rate hikes, giving us a better chance of avoiding a recession. However, it's my belief that we are already in a recession, and that will be confirmed the first week of July when the second quarter GDP numbers for 2022 are reported. If you have 2 consecutive quarters of negative GDP growth, that signals we are in a recession. Last week ended up with the Dow up 5.4% to just north of 31,500 points. The S&P 500 up 6.4% to 3,912. And the NASDAQ, the tech sector, up 7.5 to 11,608. Bonds overall, they saw modest gains. The 30-year UMBS 4.5% up to 0.20 to $99.29. Freddie Mac's primary mortgage market survey reported that the national average 30-year fixed mortgage rate is up just 3 basis points, which is 0.03 of a percentage point. Remember that mortgage rates can be extremely volatile, so check with the mortgage professional or ask Chuck for up-to-the-minute information. And a little did you know from Realtor.com, their forecast that a moderating housing market will give buyers more options. The number of homes for sale is growing more than originally projected, driven by more sellers and a slowing sales pace. All right. So the forecast for this week is that pending home sales and GDP down, inflation, manufacturing will be up. The pending home sales index of signed contracts on existing homes is expected down for another month, while the GDP third estimate of Q1 should report the economy contracting. Not so inflation, with PCE prices predicted up in May. However, the ISM manufacturing index is a forecast to show that sector still expanding, though at a slower rate. So things are really moving quickly in the real estate realm. The economy is not looking too great. I'm sorry to be the bearer of bad news, but I was just listening to CNBC on their market, and a lot of the economists were saying they're going all cash. They're not buying anything at the moment. They're going to hold cash because at the end of the pretty rainbow, there are going to be some opportunities. So anyways, thanks guys for checking me out today. That's the Monday market pulse for the week of June 27th, 2022. If you have any questions, please leave them in the comments. Like and subscribe. Share this video with somebody who might not know what's going on in the real estate market and the economy. Shout out to Greg and his Lions. Shout out to Chuck and his Schmuckatellis. Hope everyone's doing well. We're still working on a condo. I got paint still left on me from yesterday, refinished the cabinets, but the market is shifting very quickly. When we ran those projections in May, it was looking very, very good, like we could hit a home run. Now it's looking like we're going to hit a double. But we baked that in just in the event something were to happen. So when you're analyzing investment deals, fix and flips, buy and holds, you've got to factor in a possible price correction, okay? So we factored that in. The unit's going to be gorgeous. It's going to be great. It's going to look beautiful. It's already coming together. The floors are done. It looks great. But there are several other properties that came on the market in that community. I believe there's 9 that are listed. And when we started the project, there was only 2. Seeing huge increases of inventory coming. If you're in the market to buy, hold tight. I think opportunities are coming. All right. We'll talk to you later. Have a good one. Bye-bye.